Good evening and welcome to tonight's live webinar where we look at ASX investment opportunities in review for the 24th of August. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service which includes access to our model portfolios for both ASX and US stocks, our ASX and US High Conviction, which picks up the themes discussed on the blog and in the recordings. And within the portfolio, we can obviously run an independent portfolio where we work in partnership with you to execute ideas that we jointly agree on. And you have access to derivatives, where a popular strategy is the covered calls to enhance the income return of blue chip stocks. If you'd like to know more about the service, please contact me on 1300 614 002. The technology that I'm using tonight is the Investor Signals member area. You can subscribe to the service for $1,320 for the year, and if you'd like to obtain a free trial, just visit investorsignals.com. Moving straight into a graph of the US leading indicator for global growth, which is the NASDAQ. And whilst valuations are extremely stretched, the market continues to pay a premium to have exposure to growth. The rally's getting narrow, so meaning that it's a small group of stocks that's carrying the index higher. And what we're seeing is valuations. So on the large cap, the likes of Apple or Microsoft, they're now trading up at around 40 times earnings. You're seeing chip stocks, so something like AMD, which is a competitor to Intel, trading up at 150 times earnings. So valuations are stretched, but in an environment where there's limited alternatives for growth, you're seeing money flow into these mega cap stocks, which are driving the index higher. Since the rally began, we've only had sort of periods where the market's closed below the average for maybe 1 or 2 days. I continue to suggest that investors just watch this, and if we see this roll over, which stocks obviously don't just keep going up to infinity, so we're going to be getting soon to a point where the valuations just are not supported by earnings growth, or just the valuations are to a point where they're not justified. And we've seen these events occur in the past where PE valuations have just expanded, but at what point is 40 times earnings or 50 or 150 times earnings too much to pay for a stock? And we're probably getting close to where those questions start to get asked. Especially in the environment where it's still worth remembering, as we've completed second quarter earnings in the US, revenues down 10%, profits down 30%. So again, it's a fairly narrow group of stocks that are benefiting in the current economic environment. So keep an eye on this, watch for it to break below that average. When that happens, start thinking about your inverse ETFs, BBOS, BBUS, as a way of hedging, maybe Yank, which is the short Aussie dollar, and also long gold. So as a basket, they're all your risk off positions, and we'll have a look at those as we move through some stocks this evening. So the way I've set, this is the members area of Investor Signals. The way I've set the service up for myself is I go into my watch list. Under watch list number 1, these are the custom lists. And just to explain, if you're looking at the technology for the first time this evening, recent blog post stores the last 30 days of stocks that have been tagged on the blog, which then allows you, so you can click on that, look at the watch list, rank them by percentage gain, rank them by whether they're under buy or sell conditions. So again, the last 30 days of stocks on the blog. Recent ASX signals, these are stocks that have switched to buy or sell conditions, and that runs off a 3:30 p.m. scan each day. And this particular watch list just stores the last 7 days of those signals. So if you've been busy and you've missed the scan results, once a week you just need to come in and toggle through those recent signals. Likewise for the international. And the way that I've sorted these out, I have list 1 as the main indices, NASDAQ S&P and XJO. List 2 I have as my US stocks, and then list 3 the Australian stocks. So what I'll do this evening is move through the stocks that are under buy conditions within the top 100, and then we'll circle back round and I'll just review these as what I think are the main stocks that you want to be thinking about in the market this week, or even tomorrow. Okay, so on that note, let's start by coming in here. We'll select the ASX 100, get the percentage gains to the top for today. Then we come across here, organise them so we're looking at the buy signals. So all these stocks are under buy conditions. As I move through the list, you'll see it get to a point where we switch from buy signals into sell signals. So I'll just draw your attention to when that happens, and I'll provide brief comments on some of these stocks that are under sell conditions that we favour on the short side. Now, TPG, if you've been reading the blog or watching the recordings, this is a stock that I've been drawing your attention to, especially towards the end of last week there. At around that 725 was our entry range. The stock's now trading 825. Whilst the upside to this is probably no more than $9, and there's really sort of polarized views on the valuation of TPG. A number of investment banks downgraded their earnings outlook. One of the leading investment banks just upgraded it to $9. But the reason why I've been drawn to TPG is the cost synergies coming from the Vodafone acquisition. The stock moving towards a 3% dividend yield over the next 18 months. It just appeared to me at around that $7.25, $7.50 level, it was getting cheap with relatively low risks to the downside. As it trades back up to around that $8.50, to me it's back at around fair value. Could trade a little bit either side of that. But if you'd been reading the blog or watching the recordings, hopefully that's a trade that you're participating in. Virgin Money not doing there at the moment. Afterpay, other than just to draw your attention to the green box at the bottom, here's the algorithm buy condition. So it is a stock that's in our model portfolios, as is NextDC. So it's under algorithm buy conditions, which is a reference to these markers at the bottom with the eye in it. The concern that I have with NextDC is the claims made by one of the fund managers around the accounting irregularities or questions being asked about the way the accounting's been treated. Normally when you see those type of accusations come forward, there normally ends up being some truth to them. So that leaves me a little bit concerned about NextDC, but we continue to review the fundamentals there, and I'll keep you updated on the blog. Fortescue, terrific result. Iron ores remain very strong, up at $130 a ton at the moment. Fortescue, you can see there that I've just shuffled a support line in there at that 1750 level, and from a momentum standpoint, we're still long the stock in the model portfolios at the moment, and will remain that way as long as it remains under those algorithm buy signals. But it would appear that iron ore is getting pretty close to a level that where it's unlikely to push too much higher, especially as if we see Vale come back online. Brambles, so this is a stock that I think you want to make a note of. Between $10.50 and $11 is the buying opportunity here. We last traded it off that $10.50, sold out of it at around $11.20, $11.30. Buying back, or we've already bought back in on this pullback here, and looking for it again to move back up to around $11.50, $12. Now when you look at Brambles over sort of the most part of the last 12 months, fair values in that midpoint there at around $11. It is one of the few stocks that's guided towards earnings growth. May not see it at that 5 to 6% that was expecting, but certainly maybe somewhere around 3% earnings growth, 2.5% dividend yield. And Brambles is attractive given the amount of its revenue that's tied to consumer staple products. So buy Brambles on the dip. Ansell expensive, but is under buy conditions, so it switched to buy conditions there, but up at around $40. We're not doing anything new there on Brambles. A2 Milk's a recent signal, so by that referencing the algorithm buy signals down the bottom here. Now, the conservative entry range is going to be in between sort of where that last high or low was there at $17 and where we've got the recent signals here at around 18.50. So the midpoint there is probably somewhere down around 17.50, 17.75. So if you're looking for a more conservative entry level down there, keep an eye on these short-term indicators to turn higher. But at the moment, what we're seeing is it's under algorithm buy conditions, and the shorter term momentum indicator, or the intermediate momentum indicator, which are these arrows, is also saying that it's ready to move higher. If we go to the short term indicators, what we would be focusing on there is the price above the average, and are we starting to see a turn down here in this stochastic moving a little bit higher. The earnings results for A2 Milk maybe fell a fraction short of market consensus, but the company still forecast to grow earnings between 15 to 20%. Spark Infrastructure now under buy conditions. The short-term indicators are moving higher, so support there at around that $2.15. ASX delivered a good result, about 4% underlying earnings growth. The stock trades on a 2.5% dividend yield, but it's probably about as good as it gets for revenue and profit growth for ASX, given the volatility that we had in that March quarter. And maybe over the next 12 months things are a little bit more difficult on the growth front for ASX. But owning it at these levels and selling a tight covered call, you're generating around 8% cash flow on an annualized basis, and the downside risks for ASX are relatively low. So that's a strategy that I can help you with if you're looking for cash flow at the moment. ResMed, at 40 times earnings, the multiples come back a couple of percentage points, but it's still up pretty close to those type of levels. It's expensive given that growth's starting to moderate, so just be a little bit cautious here on ResMed. I would hope that we get to see an opportunity to buy into it at lower levels over the month or two ahead, so we'll revisit that one on the blog when the entry conditions are right. JB Hi-Fi, concerned that growth moderates over the next 12 months and would like to look at this at lower levels. So we last sort of had the algorithm buy signals on the dip through here, and I'd expect to see another pullback over the next quarter or two, and an opportunity to buy into JB Hi-Fi at lower levels. Sydney Airport, so the rights issue is now complete. The stock price was well supported today, and I've put support in there at around that $5 level, trading $5.44 at the moment. Now these gold stocks have sold off as the US dollar rallied a little, and a bit of profit taking in gold, but I think this is an important area of the market to stop and think about over the coming days. So we revisit Northern Star, Newcrest, Gold Road Resources, Saracen, all as opportunities for you to take a closer look at. But Northern Star, you can see I've drawn sort of a channel there between maybe $13 and roughly say $14, but we're pretty close to where I think gold starts to find another level of buying support. Orica, this has been one of our preferred opportunities in the market, has rallied from sort of that $15.50, $16 level. The target's between $18 to $19. If you own it at lower levels, look to take profit within that range. But I still feel that the longer term fundamental story for Orica remains well supported, given the growth in the mining industry at the moment. So any sell-off's likely to be fairly shallow in Orica. Maybe it consolidates between that 18 to 19, but the general trend is still higher there in Orica. AusNet Services, so this is a stock that's been in our model portfolio for shorter term traders. We bought it on the sell-off down here at around this 165 level. We've traded out of it now at this 182 level thereabouts, and we'll keep an eye on this, but where it's sitting at the moment seems to be back at about fair value there, so there's other opportunities we're concentrating on. Flight Centre, not doing there at present. Saracen. So within these gold names, my preference is Newcrest, then maybe Northern Star, or well, in actual fact, probably Newcrest first, Gold Road Resource second, Northern Star third, Saracen, after that. But again, GDX is another consideration, which is the gold ETF. CSL, we'd bought this at around that 270 level, traded out of it around 310, and happy to buy back into it again sub $300. I think sort of now that the dust has settled after the earnings result, it is expensive, but they did deliver the 10% plus growth that they needed to meet market expectations. But at around 40 odd times earnings, it is expensive on a 1% yield. But buying it on this dip, I still think sort of we look back and sort of see this whole 270 to 300 level as an ultimate support where the stock can trade higher from that. So comfortable buying CSL on a pullback, and I'll continue to revisit that on the blog. Newcrest, so anywhere between $32 and $34 is the buy point for Newcrest. Beach Energy, support there at around this 140 level. The market's fairly optimistic about the forward production growth for Beach, and we may see further buying support creep in. So I think this is one to consider on the long side at the moment in the market, is being long Beach. Sonic Healthcare, terrific business. Underlying growth was probably only around 3% in the earnings result, and it is expensive where it is at the moment. So we'd like to see this roll over under a soft market conditions, a pullback, and we'll be watching for the next algorithm buy signal, and I'll draw your attention to the timing on that via the blog or future recordings. QBE Insurance, not doing there. The result was slightly better than the market expected. Westpac, obviously you've read or seen that they've suspended their dividend. I still have some concerns that there's softer results and maybe more troubled loans to disclose in the banking sector over the coming months. The timing of switching to being long the Australian banks is obviously a tricky proposition. It seems reasonable that if we see a sell-off in the US equity market, there's another leg down in the Australian banks. So one of the ways to get exposure to the banks is the BNKS Global Banking ETF. But again, we're not really sitting on the long side of the banks. We've probably been more focused on short CBA, short NAB. But just mindful that towards the end of this year, there's likely to be a point where you want to be long the banks and sit with that trade across a number of years to get the benefit from it. Dexus, not doing there at the moment. APA Group, a little bit of there's a concern that they're having a cost overrun on a project that they've committed to. Probably pushes APA back down to test that $11 support, but I'd see that as a buying opportunity. So any weakness over the next day or two, consider that a buying opportunity. Keep an eye on it down to say that 1080 level. Watch these momentum indicators for them to start to turn higher, but I think you'll find that that'll tie in with around that 1080 level finding support. But comfortable that APA can deliver 6% earnings growth over the next 12 months, which there's a narrow group of stocks that we can have confidence that are delivering earnings growth. Ramsay Health Care consolidating at around this $65 level. Good cash flow opportunity in the market, defensive yield at about 2%, but earnings growth is relatively low. But it's a stock that you want to continue to buy on a dip. So whether we see that back at sort of that 62 level, and we'd be willing to consider that from a trading standpoint, buying it at 62 and looking for a move back up towards 68. Alumina, support there at around that 150. NIB Holdings, we're cautious there on the health insurers, and that's proven to be right. Reliance Worldwide delivered a better result than the market feared, but earnings were still down on the same time last year, but just better than, as I said, the consensus had anticipated. So now what's happened, we've switched into stocks that are under sell conditions. So by that, the primary signal is these red boxes up the top here, which reflects that the stock's making lower lows and lower highs. So we can see there that the signal tied in there with the lower high. You want to see that red arrow pointing down as well, and from a shorter term you'd expect to see these indicators not at the bottom but up the top and starting to roll over and move lower. So that'll be the common theme as I toggle through these stocks that are under sell signals. So Nine Entertainment looking at running in a resistance back up at around that 170 level. Altium delivered actually a reasonable result, and while they lowered their guidance for growth targets, it's still a highly attractive business, and we'll continue to have a closer look at these fundamentals and keep you updated on the blog. Generally, we don't buy too many stocks that are under algorithm sell signals. So in the case of Altium, it's still under primary sell conditions at the top, but we can see the support they're building at around 32 and it making a pushback up towards that 37 resistance at the moment. Car sales still have concerns that some of these car sales, REA, Seek, are getting expensive. They're obviously being dragged higher in line with the Nasdaq moving higher, but there is a point where they're lower growth businesses relative to what we're seeing in some of those US mega cap stocks. And I think there's just a period, there's a point where the buying exhausts in these names and they roll over. So we'll continue to watch that Nasdaq as the leading indicator for that in some of these local tech stocks. BlueScope back up against resistance at around $13, so not doing there. Seek, the earnings result disappointed here. I'd commented that the company had suspended dividends and moved to issue debt, which was a telling sign on the weak result that was about to be announced. We've seen the stock rally back following that sell-off, but at around sort of $20 to $21, I'd expect that to run into resistance again and actually move lower, so we'll keep an eye on that in the coming week. ALS up against resistance around 9.15. James Hardie resistance up at around 32. Obviously the building data's been tremendous both in the US and in Australia, but in particular in the US. Oz Minerals, copper's been strong, but up against resistance at around $15. I think it's starting to look fairly expensive. Magellan back up against resistance at around that 63. Challenger, obviously they have their troubles there, and we're avoiding exposure to Challenger. Xero, it's under sell conditions, but the fundamentals here are extremely good for Xero. It just trades on a very high PE multiple, and it's a stock that on the next algorithm buy signal we've got no problem buying into Xero and adding that back into portfolios. Iluka resistance up at around $10. Wesfarmers resistance up at around this $50 level, but we're not on the short side of that at the moment. Medibank Private, health insurers are a tough environment, so we're not looking for further upside there in Medibank. Cube up at around $3 as a resistance. WiseTech's broken out, so that's one that we'll have a look at when it shifts back to algorithm buy signals. Vicinity not doing there at the moment. Coles and Woolworths, we continue to hold these names simply because of their defensive consumer staple exposure, but Coles has kind of closed that valuation gap on Woolworths, so we see them both as suitable places to continue to leave money in the market, but you probably want to consider selling covered calls over them to boost the cash flow from them. AMP not doing there at the moment. Cleanaway, terrific business, and we want to look at that on the next algorithm buy signal. Domino Pizza's not doing there at the moment. Aristocrat, a little bit cautious of what the earnings picture looks like over the next 6 months, and think in a soft market, Aristocrat could get hit fairly hard. So we're cautious there on that one. REA, these tech stocks in general, so car sales, REA, Seek, we're a bit cautious that their valuations are getting stretched. Insurance Australia Group, there's a point that this gets oversold, it's not under algorithm buy conditions, but I just comment there that tonight that at around $5 it starts to come back onto our radar, and we start to have a think about that from a point of view as to whether it's getting oversold. BHP and Rio, Fortescue, all holding up against their resistance where they are at the moment. So again, you could think about selling covered calls over them. I don't think the downside risk is substantial at the moment, but iron ore at 130 running into resistance. I expect more consolidation out of the miners. Boral up at around that $3.80 to $4 we think's near resistance. Woolworths, as I mentioned, continue to hold it, maybe sell covered calls to drive the extra cash flow. CIMIC Group, now this is one that I'll pause on and just make sure that you're taking note here that the fundamental turnaround story for CIMIC, with them de-risking their balance sheet, focusing on infrastructure projects here in Australia, New Zealand, and in Asia, there's a strong possibility that this sort of $20 to $22, $23 level doesn't get tested, it doesn't break below that. So we're watching this closely. We've built long exposure in CIMIC, and it's really one of our few sort of higher conviction recovery plays in the market. So we're around this. So if you're trading the market, you might be thinking about simply being long CIMIC with a stop below $20, which gives you basically a 10% stop loss. And we're looking for this to gradually move higher over the coming months. Incitec Pivot, preference has been Orica over Incitec, but I've spoken in detail Incitec in previous recordings. Telstra Corporation, disappointed, especially on a forward guidance basis, much lower than the market anticipated. We've seen it trade down from $3.50 down to $3. The sell signal was present there up at around that $3.50, $3.60, but down at $3, it's in that lower band where it's going to start to get valuation support, and on a just over 4% dividend yield, it's still attractive in a low income environment. Washington Soul Pattinson not doing their. Transurban, we did have a target of seeing this down to around that 12.50, 12.75 as an entry level. Owning it here and selling covered calls over it is another way of sort of de-risking that. So I don't see that even in a soft trading conditions or market conditions, I'd be surprised to see Transurban much below that 12.75. So again, it's an opportunity there to own it and sell tight covered calls, I think, is the way to play Transurban. Stockland's not doing there at the moment. AGL was a soft result with soft guidance. Link Administration not doing there. Macquarie up against resistance at 130. Rio consolidating up near resistance there. We see sort of more downside risk for Macquarie than what we do with Rio. Atlas not doing there. The index. Wally still cautious on this, and not something that we're active in on the investment on the long side of the portfolio. Goodman Group delivered 10% earnings growth, exposure to industrial or logistics centres, which is the right space to be in. We've seen a huge build up in their new development pipeline over the last 6 months, and whilst the stock's expensive up here on a 2% dividend yield, we really want to keep an eye on this over the next 2 to 6 months. As we see it pull back, you'll see it switch back into algorithm buy conditions, and at that point you want to look at adding that into your portfolio. GPT, we're cautious there. Tabcorp, cautious on that. Computershare, we think, up against resistance at around $14. So again, if you're joining us for the first time, what we're seeing is a large number of stocks that are under algorithm sell signals. I'll get to the end of this list shortly, and then we'll come back and have a look at the stocks on the buy side that we're focusing on. I'm just trying to sort of give you a bit of a heads up as to the stocks that we like, but they're under sell conditions, and in the months ahead as they shift to buy conditions, we'll be adding them back into the portfolio. Amcor's certainly one of those names. About 3 to 4% earnings growth, and happy to buy that on a pullback and a switch to algorithm buy conditions. NAB has traded, so in general, even the US banks are down at anywhere from 10 to 20% from their highs following their earnings result only 3 or 4 weeks ago. The Aussie banks are similar. CBA is probably a bit late in its sort of capitulation or rollover, but we've started to see that. And but in NAB's case, resistance there at around $19, and still a little bit cautious there that there could be further downside for the local banks. Cochlear, our preference has been CSL, and Pro Medicus, Ramsay Health Care over Cochlear. Oil Search, our preference is Beach over Oil Search. Ampol up against resistance there at around $30, which was just our fair value target. Bendigo under sell signals there, and it's traded down from $8, still moving lower, so avoiding the regional banks at the moment. Coca-Cola delivered a better result than expected, but still down on the same time last year, but getting yield support where it is there at the moment. Aurora not doing there. I'll just jump back to Aurora and again just draw your attention to the sell signals under the lower high. So what it's flagging there is this cascading lower low, lower high structure. And we'll keep an eye on that as it reverses in the next 6 to 12 months. We'll see that move into an algorithm buy conditions. Lendlease under sell conditions at the moment. ANZ under sell conditions, so there was the short signal up there. CBA, so this is one that we'd spoken about on previous recordings on the short side of the market. So the sell signal came in there at around that $76 level. It's got the negative arrow pointing down. It's a price action below the average, so still expecting some downside pressure there in CBA. And I'll update you on the blog as to when we see that reverse. Bank of Queensland under sell conditions. Santos, so this was a stock that we were long, and then it's just switched to sell conditions there at around that 590 level, and we've exited Santos. If we look at this a little bit closer, it's under sell, negative arrow there. It's below the moving average, so the short-term setup's negative as well as the longer-term sort of primary algo signal. Star Entertainment, cautious here. We think Star and Crown still have tough trading conditions ahead and little visibility on return to normalised earnings. Woodside Petroleum, it's under sell conditions, so preference is Beach. Origin Energy under sell conditions, and it has moved lower. The earnings came in a little bit below expectations, especially in sort of that traditional energy side of the business, retail electricity side of it. And we saw that in AGL's number as well. We'll keep an eye on Origin. It is a high quality business, and its revenue or its income distributions coming from its LNG investments is substantial, and for that reason we're willing to take a closer look at Origin, even though it's under sell conditions, if we see it trade down at lower levels. So maybe as a target around that $5 level, we'd take a look at Origin. Treasury Wines under sell conditions. Downer under sell conditions, so preference CIMIC over Downer. Suncorp, still avoiding the insurance names, although Suncorp delivered a slightly better result than expected, mainly in the insurance side of the business, delivered wider margins than anticipated, but we still think that there's some risks there, especially in the retail banking side of the business, so cautious there on Suncorp. Evolution, preference is Newcrest over Evolution. Mirvac under sell conditions. Scentre Group under sell conditions. South 32 under sell. Crown Resorts back up against resistance at $10 there. Horizon under sell conditions, and happy to have a look at Horizon maybe back down at 425, but their forward guidance is for lower earnings. Qantas under sell conditions, and there we are back to TPG. So as I mentioned at the beginning, I'll conclude tonight by going through my watch list number 3. And what we'll do is get these in percentage gain order. Buys to the top. So these are stocks that I've commented on the blog or in the recent recordings. So we'll just move through these. TPG, hopefully you're already set on this trade. Look at taking profit up and around that 850 level. Pro Medicus, this is one that again, hopefully you were already set in this. I'd been flagging it regularly on the blog there at around this $22, $23 level. At around this 27, it's an expensive company, but they did deliver in line with expectations of about 30% growth. But it does trade on a PE multiple close to 100 times earnings. But it is a fabulous business that's delivering growth that's well above average, and they're doing so with clients being the major hospitals in America. So if you'd like to know more about Pro Medicus, just go onto their website and learn a little bit about the technology that they're working on. So fabulous business, good long-term prospects, but it is expensive, so it is going to be subject to volatility. So depending on what your objectives are, you could simply trade out of this at around this $27, $28 level. But if you're comfortable with holding this longer term, I don't see that that the company does anything other than continue to win new contracts and expand revenue. Bega Cheese reports its results on the 27th, and we're looking for this whole theme of these companies that are benefiting from people spending more time at home, and in this case with Bega it's cooking and less dining out. So we'd expect to see a slight surprise to the upside in the upcoming earnings results. So look to trade out of that at around just over $5, but the earnings results the 27th. Brambles, comfortable buying this. I think anywhere around this $10.50 to $11 is a good buying opportunity. A2 Milk, support there at around 18. Maybe if you're a bit conservative, you might be waiting for a pullback to like 17.75, but not sure we get there. Yank, which is the long Aussie dollar, so this is a risk-off trade. If we see equity volatility pick up, money will come out of risk currencies and flow back into the US dollar. The Aussie dollar will soften in that environment. So just that's the logic for that one making it onto the list. Technology One is a new algorithm buy signal. I flagged this on the blog. Support there at around $8, and it's trending higher, so we like the look of that. ASX started moving higher off that 81 level. I've covered that in detail tonight. This I quite like as a low risk proposition in the market, Vanguard Global Infrastructure. Now it's a low growth opportunity, so if you make 10% out of this over the next 3 to 6 months, that'll be a pretty reasonable outcome. But around this $55 level looks to be support. Again, in a risk-off environment and some level of normalization in the economy over the next 12 months, this basket of global infrastructure stocks that you're getting exposure to, I'd expect to see this pushing back up towards that $60 level over the next 6 months. Orica we like, so further upside into maybe that $18 to $19 range. Support there at around $15 for the Global Dividend Fund ETF. The healthcare, so we've just been adding this into portfolios at the moment. Again, slow growth, but expect to see that grind back up towards that 105, 110. CSL, buy on the dip, so around this 295 is another chance to enter that. Newcrest, buying this between that $32 and $34 level. The Cure ETF, so looking for this to find support around $57 to $59 range. APA Group, buy back at around $11, $10.80 to $11. Ramsay, if we see it back at 62, you want to buy that. BBOS, which is, you want to look at this if the Nasdaq trades below that moving average. Gold Road Resources, so this sell-off in gold, this sub 160, whether it gets down to 150, maybe not, but certainly between 150 and 165, I think that ends up being a good entry level into that, and I'll continue to update you on the blog. And BBUS, which is the short US ETF, so it's inverse, goes up in value when the US equity market goes down. So again, your reference for that is waiting for that Nasdaq to close below that 10-day average before you look at aggressively scaling into BBUS. GDX is a gold miners ETF. My preference is really Newcrest and Gold Roads over the GDX ETF. Lumina, not doing too much there at the moment. And back to TPG Telecom. So thank you for listening in to tonight, and just remind you to come into the members area and toggle through the recent blog posts, have a look at the ASX signals, and if you'd like to discuss any of the ideas presented tonight, please give me a call, 1300 614 002, or if you'd like to trial the software or discuss how the broking account service works, please feel free to give me a call tomorrow.